Hello everybody and welcome to Street Smart Investing. I'm Albert, your host, and today I'm doing video number 3 on the banking services sector. So I've already done about 10 companies. I gotta edit the stocks and put in the symbols for the last 2 videos. I'll do that right after this video. But again, I'm doing the next 5. So this is number stocks 10 through 15. So yeah, let's begin. I took a picture on Google Lens and then I saved the whole list. So anyways, this is the whole list. So the next 5 I have on my list is ACNB, MBINO, RRBI, BFC, and FRAF. It's pretty cool that I actually have the symbol and the name of the company. Well, most of it. Hopefully that is the full name of the company. Well, most of them. So let's begin with ACNB. Let's do that. ACNB. So let's do that. Just gonna AC. So basically, I'm showing you if it's a good company or not. So PE looks good. Dividend, it can cover the dividend. Really low volume. It's at $28.19. So let's look at the order flow. Large scale orders are pretty low. Support and resistance. To short this company is pretty low. That's good. Now let's look at the 2020. They've been growing revenue and net income. That's good. Profit. Obviously, they're going to grow and go up and down. That's normal. That's normal for it to go up and down. I want to see if there's any splits. Okay, that's good. No splits. They offered a special dividend in May. That's not typical of them. They don't do it all the time, but they have been pretty steady in paying the dividends. They grow their dividends every few years, so that's not too bad compared to the other ones. But there's better ones. So, oh wow. So I guess retail investors own this. That's the majority of that. And that's pretty much it for this company. We can look at the financials real quick if you want, but either way, they have good numbers. The margins I don't have. The debt, we saw that. Just gonna show it briefly, very, very quick. Dropped in 2020. Cash flow positive, that's good. So yeah, next up that I have on the list, so good company, MBINO. Merchants Bank Court, pretty cheap, low volume. PE, they're very undervalued. Whoa, okay. They don't have no earnings, but they pay a 5% dividend yield. That's insane. Maybe they're restructuring their balance sheet or something. That is pretty cheap. That is a pretty cheap company. Let's look at the scale orders. Okay. That is, yeah, that's pretty low. Okay. Let's look at the company 2020 results. Like always. Wow. Okay. They grew their revenue by a lot in 2020. Those were their earnings. Then why did it say 0 before? Probably restructuring. They're paying dividends. Hopefully they still are. Oh, it looks like they just started paying dividends not too long. Well, a few years, but since 2019, then they raised it 37. They've been consistent quarterly. Any splits? No, that's good. We've just been paying dividends. So this company is not bad. Not too bad. They're a diversified bank. Focus on multifamily housing, healthcare facility financing, retail, correspondent mortgage banking. So yeah, I would add this to the watch list. Definitely a good company. It's like retail investors are into this stock, I guess, because institutions are not, meaning other investment firms and capital firms and all that. They're not the majority of the shareholders for this stock. So, yeah, not a bad company. So, what is the next one? RRBI. So, we have RRBI, Red River. So, let's tail of the tape. So, pretty much $51. Earnings are pretty good. Dividends are pretty low. Look at the order flow the last 5 days, nothing. But by the looks of it, the last time it was for large scale, I'm assuming it was pretty positive in buying. Profitability, ROE. Okay. Yeah, let's look at any splits. That's good, no splits. So they start paying a dividend and wow, weird, in 2020. They raised it in 2021. Definitely a good company. Once they start paying out dividends, definitely a good company. Any company in general. They started paying dividends now. It's a really good time to start jumping in, you know? Especially if they already paid since last year and they're growing the dividend. Once they grow it, and you see that they're growing it, that second year, yeah, you definitely want to jump in. Hold on, I'm busy doing something. So, obviously, banking services. They say centers in Louisiana, around that area, real quick. So the financial details, let's look at that. They've been beating earnings, that's good. The margins, nothing. The debt, that's pretty typical for a company, for a bank. Let's look at the revenue. That's been growing, income's been growing. Balance sheet, usually high stakes for banks, it's pretty typical. This one's, it's a good company. But by price, you can find a cheaper company because I know some people already, might say that it's a little too pricey. So next up we have BFC. BFC. Run through that one real quick. Earnings are good. This is the priciest one so far for this video. Any news, charts? Looks like they've been selling the last time. Any shorts? Selling for today. Support and resistance. So went up, looks flat, not bad. Not too bad. So let's look at the details. Oh, they grew revenue and net income there. Earnings is 5. I'm not gonna look at that yet. Okay, so oh wow, they did give a special dividend. So when was the last time? So every 2 years it looks like they've been growing their dividend, and not by much. But something's better than nothing, right? So this company is okay. I would add this to the watch list. The percentage is low, but they're a little pricey, and the percentage is low for the dividend yield. But they earn pretty good. But again, I will watch list that one. But again, it's not as good as it should be compared to other ones. There's just so many to choose from. So your earnings 3.6 covers the dividend, pretty cheap. 3.75. That's a good. Well, it's undervalued. That's a decent yield. Not the best, but it's decent for people that can afford it. I want something to be affordable for people. So majority has been selling. Analysis. So we have it's been growing, then pause, growing again, then kind of pause, kind of evened out again. Looks like it's gonna grow. Positive growth. Where is the short interest? Oh, so short interest has been going down. Let's look at the 2020, and let's look at. Okay, so institutions 25%. So retail investors are the majority of the shareholders for this one. I don't really like that. I wish the percentage was a little bit lower, like half and half. Because I don't know, just retail investors seem to sell really early. And again, institutions are more likely to hold a little longer. So yeah, let's look at these. Oh, they had a split. The last time they had a split, I don't like that. That's too recent. I say the last 20 years. That falls in the 20-year category. So no, I would say no. Even though they're growing the dividend, I would say no, to stay away from this one just because that they had that split. So a few more years and then they would qualify. 3 more years to be exact. I like to give a split a 20-year period. Because a decade is too soon. That, that just falls to having a habit. So there you have it. I hope you guys enjoyed the video. I try to do this under 15 minutes. I will keep you posted on the next one, and hopefully I can do the next video this week. So thanks again for watching, and I will see you guys soon.